Happy Friday, everyone. It is 8:03 a.m. on Friday, the 25th of August, 2023. This is episode number 2524. Thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So this morning, the overall picture is that we have a mild risk on from yesterday's settlement. So all of this is versus settlement, but the trick is, well, where did we settle? So although we are mildly risk on, just understand that we had pretty good selling yesterday. Asia's red. And we're bouncing off of what was a pretty weak kind of close yesterday as we ran out of time and didn't find buyers. So just keep that in mind. Really quick, I'm not going to spend too much time on the sheet here today. German IFO is lower than expected this morning. That was one of the kind of key numbers for the week. That really wraps us up. We do have Michigan sentiment coming, but that's the final number, and then we have Fed's Chair Powell. Thing is, Fed's Chair Powell, it's all in there. So a year ago, the comments from Powell regarding the economy were really volatility inducing because the market at that time wasn't sure what the Fed's posture was going to be. But at this point, we've really cleaned up the balance sheet a little bit, and we've done a substantial amount of interest rate hiking and so on. And the expectation is just another iteration of, hey, we think we're in a good position, but we're going to respond to whatever releases come. The X factor today is actually ECB's Lagarde. The ECB is in a very, very different position and has a lot of work to do. So look out for that. 3 p.m. Eastern, 2 Central. That's where we're likely to see some volatility. So other than that, I'll leave it at that. Looking at the S&P this morning, we have a multi-distribution profile. Again, we have pretty active price discovery in the overnight session. Again, we're having about 26, 27 points of range, just like we did yesterday. The inventory is 89% long, which is relatively substantially long. But again, we are trading in the 4,400 area. You can see the S&P in real time here at 4,401, up 15 points from settlement at 4,386. So keep that in mind. It is risk on-ish versus yesterday's settlement, but the overall context and narrative isn't really supportive of that. Again, about 26.5, 27 points of range, and the point of control shifted dramatically down after yesterday's action to 43.90. 43.90. We're down in the 4,300 handle here, again teetering on the 4,400 century figure. So not the best place to open. The bulk of yesterday's volume occurred between 44.25, which was the weekly point of control, the prior week's point of control, and 4,400, and here we are at the 4,400. So we're kind of pushing up against, there was no value yesterday. We're kind of pushing up against some of the most traded areas yesterday, or heavily traded area yesterday. The point of control yesterday is at 44.20 above. There's a lot above for the market to work through. Let's take a look. Here's a quick look at what we said yesterday. And if you recall, if you were here, the primary scenario, so I'm showing the NQ here, the primary scenario yesterday is, look, the Nvidia news came out. The Nvidia news was very narrow. That entire rally overnight, that big push overnight and the gap up is really being carried by a few semiconductor stocks in sympathy with Nvidia. There's a huge amount of AI chip demand that is not being met, so there's a big opportunity for higher margins in that space. But the rest of the market did not respond, as we saw in yesterday's convergent trading pre-market summary sheet. The Russell, the Dow, the European indices were all down, while the NASDAQ was up 1% and the S&P was up 0.5%. And what I talked about yesterday is that the NASDAQ is opening up in a really important over-under area in this 3450, and the expectation is it's very likely to have a hard time pushing higher, and it's very likely to respond. And if it does respond and gets below the P, the big volume part of the P-shaped profile, it is very likely to run down, right? And that's what we had. It's a very clear, to me, it's rare that the market is so clear and what it wants to do. But again, having been in the business for 23 years, you never actually believe it, because as clear as it is, the market will do what it wants to do. And it's hard to say who's standing on the sidelines and is not being represented on the chart, right? There are three forces in the chart. There are buyers who we see. There are sellers who we see. So they create the tick. They create the tape. And then there's the people who are sitting on the sidelines that can step in at any time. So those are the people that create, the participants that create randomness. So once it clears below the 15,150, then we start to really slip, because, as I said before, pretty poor structure on this rally on Wednesday from below, and we saw that both in the S&P and the NASDAQ. So here's what we've got. So let's look at the S&P. I could scroll back the Trader Bite from yesterday and show you that, but I'm not going to spend much time on that. So we know in the S&P that we had the same kind of thing happen, and the number that I brought up yesterday was 44.30 and a half, 44.30 and a quarter. Once we clear that, though, that's the bottom of the single prints. Once we clear this area right here, the high of the prior day in the 31 area, and then that 30 quarter, it's a bloodbath, and that's really what we got. So this is the action yesterday ended the one-time framing up both in the ES and the NQ. In the ES and the NQ, the ES, the equivalent level in the ES, to the NQ. The NQ, we said 15,334 to 15,350 or so. The equivalent in the ES is the 44.65. This is a really important area, and we ended up opening at 60, opening in the 65 area, going to 68.75 and failing through. And so the anticipated resistance in this area held. It comes from right here. You can see a high, a point of control, a high. And if I scroll the chart back, you'll see that 60 to 65 has ended several auctions, daily auctions in the past. So that area 65 was key, and that area held pretty well. That's about as good as a tested area would hold before failing. And the plan yesterday is to see how we test the 65, consolidate, and then look for it to drop, right? That's what we talked about yesterday, and that's what we got. So now we're left with execution, which brings in, that piece. The execution brings in all the doubt and brings in all the psychology and the fear and the greed and the anxiety and all of that stuff. So, but coming in with a plan, not having a plan and executing is just random on top of random, random squared, and it's just you might get lucky for a few and might run into a decent streak, but overall it catches up with you. It's kind of like winning money at a casino. It just doesn't. It's not something um, that's everlasting because the odds are not in your favor. There's no edge to doing that, but luck and streaks work in a random way, and it's very possible. But coming in and understanding, okay, hey, the market's really pushed up against a really key area here. I need to see a clean break out of here. And then even after I see a clean break out of here, I need to see what's more important to me personally as a trader, and what I tell Convergent members all the time in many, many study halls that we've done is not only does it have to push through, it's the quality of the pullback that tells us what the intent is. So it has to push through, and then it has to have a hard time. We have to see that sellers aren't able to shove the buyers back before we can even buy. So, breaking through doesn't mean much to me. And that's why I'm not much of a breakout trader, although on some days like yesterday, I have to participate from a breakout perspective. But even then, I'm just taking scalp pullbacks on a breakout, on a breakdown, rather than looking for a pivot point and then just selling the break of that pivot point. That's just not my style. And the market spends, I don't remember the stat now, I haven't done it in years, but something like 80% of the 80% of the sessions in a back and forth auction anyway. So I don't anticipate to be missing much. So what are we looking at today? So we opened at the top, we closed at the bottom, multi-distribution profile in volume, multi-distribution profile in TPOs in time. We moved away from the point of control for the session and the volume point of control. We closed near the bottom. So the auction's incomplete, so we expect it to trickle down. It did trickle down. In fact, it pushed to 78.50 after hours, which I don't look at or count at all. But then from the reopen, the overnight session is 79.50, which isn't far from the 86 settlement. And then since then, it's been trading in a bit of an upward channel, yet the point of control couldn't be taken in the overnight session. We stopped at 44.06 ahead of the 44.10 POC and ahead of the 44.20 volume point of control, which is right here, this white line up here. This is the volume point of control, and this is the time-based point of control. Neither one. So I'm expecting this to be relatively weak. Why? Because this was, we've had this kind of a bit of an impulse down. We've had this pullback to our 65, which we've paraded and talked about for a long, long time. And now we have what looks like the continuation attempt lower. So if the continuation attempt gives us a higher low, and then it starts to move back up and it breaks the one-time framing down, then now we may have an intermediate term low in that 43.50 from last week. Until then, we're seeing this as just a pullback continuation lower. And because we're not able to pull back over the bulk of the profile, especially we couldn't clear the 30 yet. Until we clear the 30, the 30 is now the short-term over-under. So it's the short-term version of the 44.65 and the 44.90.93. So unless we clear the 30 today, I'm really selling pullbacks. That's the primary scenario for today. Most likely, however, after a large wide body bearish engulfing day like yesterday, the market's likely to rest. It's very likely to challenge settlement. Statistically speaking, the odds favor that we would retest yesterday's low at some point in today's session, but I'm not expecting another trend day. There's not enough news or catalyst to do that. It's rare that the market goes trend to trend. So with those factors being combined, we know that, okay, I need to kind of chill a little bit. We are not out of balance, so we're not in a gap. We are right up against this lower distribution. So you see it in the profile here. We're right up against the lower distribution. We have another distribution below us, which was hit overnight. That's your 43.80. So we're in an area where we're likely to see two-way action. I'm looking for this low from yesterday's RTH session, which was at 85.50 to be taken out. I'm looking for the 86 to be tested this morning, potentially testing the overnight low. Not really sure about that, but I'm looking for this market to kind of get down in here and just go sideways. It is Friday. The long weekend. Remember, next weekend is a long weekend. Next weekend is Labor Day weekend. It's the official end of the summer season here in the U.S. It's when all of your local pools close and get drained, and people are fully geared for school and so on and so forth. And that's when we get back into the business of volatility, hopefully late September and into October. So next weekend is the holiday weekend, so we're expecting that Friday to be just like very, very quiet. But today there should be I expect that there would be a little bit more action, and then it's likely to go quiet for the rest of the session until the close. So just manage your expectations, given that yesterday was a pretty strong volatile move down. Today, it's not expected to do that. So this is an example. There were several examples that I covered with Convergence members in the study hall yesterday, talking about trading the NVIDIA result. But I'm looking for these big collisions. These big collisions translate into opportunities all the way through. Okay, and these offer, when I'm in the middle of nowhere, these offer a way to kind of lean against whoever got filled at the time and lean against the zipper to identify a short in the direction of the move. So move down, collision, breaks through the collision, pulls back to the collision, short, look for continuation. Those trades don't get more than a couple points of risk. And we had a lot of those yesterday. We had just a ton of collisions. Some of them, many of them never got retested, and we had pretty good separation pretty early on between VWAP and mid, and so there was not much to play there. The IB was built in the middle of a downdraft, so I couldn't trust the IB, although it held pretty well. I would have expected it to push a little further into the 44.40, 44.41 area with a clear zipper up here. It just didn't do that. It went to 39, and so on and so forth. So yesterday, the buyers just, other than the original push, the early push here, which was represented by the New York Stock Exchange breadth, it's like you look at the rotations down here and you'll see that through most of it, the positive rotations were much smaller than the negative rotations or the down rotations all the way through into the close. So today it's likely to be balanced. So you can see in the overnight session, we have a slight upward skew in our delta, and we have pretty decent positive rotations versus negative rotations, or up rotations versus down rotations through the overnight session. So there's some pretty decent lifting going on, but we're going into this fat kind of profile area, and I'm expecting it to stall out here. So on the open, I'm looking for this thing to try to squeeze up. I'm looking for it to move immediately down through the 4,400 into the 43.93, 92 area, consolidate, but ultimately I'm looking for a gap to settle trade, the gap to settle setup here, the G2S setup, and most likely a retest of the 79.50 down below before it stalls out, if it'll stall out. And if it stalls out and comes back into the overnight range and back into the prior day's range, it's likely to just go sideways from there. The auction's kind of done its work, and most participants are likely just going to rest. Okay. So that's where we stand with that. Then the NASDAQ has a very similar posture. When we look at the NASDAQ, very similar posture. The NASDAQ's a little bit weaker in terms of against yesterday's settlement. The S&P is a little bit higher up here. But the NASDAQ, you know, it's that 15,150 is just a beautiful spot. The NASDAQ has a lot to work through, but the NASDAQ also has put in relatively weak structure on this sell-off. So once we get to the other side of this 15,050, we're likely to jump right into the 15,150 again, and then squeeze back into the 15,200 before the next decision is made. But for now, the NQ is very likely to tag prior settlement, and I'm expecting the NQ to retest the prior lows now that the one-time framing is done. I expect it to trickle down and start moving down, just like I said for the S&P. We're out of time, 5 minutes to the open. I know there was a lot that was covered here. Good luck today. It is Friday. It is a good day to just be aware of your emotions and not let them get out of control and eat up your account, so that you'd have a terrible weekend with a huge loss. There is no trade that's worth more than a couple of percent of risk at most of your trading account. And if you know, and if not, then just put the minimal size or move to a product that gives you that. You want to keep your risk small, because the name of the game is not to hit the ball out of the park. That's a fantasy. That's kind of a lottery ticket mentality. The goal is to make whatever account balance you have give you as many chances at the table as possible. Okay, so don't let any one trade, or don't let your emotions or stubbornness make it so that you're committing too much of your account to one trade. It is the dumbest way to be out of the game. It just is. Your goal is to just, you know, pull the lever again and again and again, as many times as possible. And over time, the expectancy is expected to stabilize and start moving up if you have an edge. Good luck.